Very good morning to all the soldiers. See, in case of a company, whenever the goods are received in a goods received section, there'll be a stamping done whereby the date when the goods are received and the time when the goods are received. This is to ensure that we don't make payment, no payment is being done where the goods are related to actually, so where no payment should be done in cases where the goods are, what you can say, not received. So the payments are made in relation to purchase invoice only when the goods are received. There is a fraud which has occurred whereby the purchase manager and the accounts clerk has involved in this fraud, whereby they have produced fake purchase invoices and collected the money. Now in this case, the auditor, what is the objective of the auditor? And the auditor has to obtain a reasonable assurance and not an absolute assurance. Explain the reason. Now first of all, the overall objective of audit as per SA 200, overall objective of the independent auditor and conduct of audit as per the standards on auditing, basically the auditor has to obtain a reasonable assurance whether the financial statements are free from material misstatement due to fraud or error, and enables the auditor to express an opinion that whether the financial statements are prepared as per the applicable financial reporting framework. To report on the financial statement and communicate as required by the standards on auditing in accordance with the auditor's finding. The process of audit suffers from certain inbuilt limitations due to which an auditor obtain an absolute assurance that the financial statements are free from misstatement due to fraud or error. These fundamental limitations arise due to the factors such as the nature of the financial reporting. So basically what happens here, there are inherent limitations in auditing whereby the auditor is unable to obtain absolute assurance where the financial statements are free from material misstatement, and this is due to, for example, as I told you, nature of financial reporting, nature of audit procedures, and audit is not in the nature of investigation. Audit is not in the nature of investigation, and the timelines of the financial reporting, decrease in the relevance of information over a period of time, and the future events. These are the various reasons. One is the why there is a inherent limitations in audit. It arises because of the nature of financial reporting, nature of audit procedures. Audit is not investigation nature, timelines of financial reporting, and decrease in the relevance of information over a period of time, and the future event. So the preparation of financial statement involves lot of judgment. There are a lot of judgment which are involved. Whenever the financial statements are prepared, a lot of judgments are involved. It's like that, not a case, but there is a lot of judgment is involved in the preparation of financial statement. And these judgments involve subjective decision or degree of uncertainty. So there is a, what you can say, subjective decision or degree of uncertainty. Auditor may not be able to obtain absolute assurance that the financial statements are free from material misstatement due to fraud or error. He may not be able to obtain any kind of, what you can say, an absolute assurance. That's the thing here. So the management is responsible to prepare the financial statement as per applicable financial reporting framework, and they have to devise suitable internal controls. Now the control would have not operated it to produce a reliable financial information because of the limitation. That's the thing here. So the management required to design controls where invoices are stamped and signed by an authorized person in the goods received section to confirm the receipt of goods. However, because of the collusion between two or more employees, the purchase manager and the accounts clerk, they allowed them to bypass the internal control by submitting the fake invoices to the payment. The collusion is a significant limitation of internal control as it overrides the control designed to prevent such fraud. Given these factors, auditor cannot provide absolute assurance and that the financial statements are completely free from material misstatement due to fraud or error. So this is what you can say, the inherent limitations of auditing.